All right. Welcome everybody. Check, radio check. We'll get the specifics out of the way first. I want to thank everybody for taking time out of their busy schedules, and it's good to be back. Today's topic is, our monthly report, and it says February. For those of you that don't know, this is always a rear view mirror look of the markets last month. And the data, as I was looking at it, I've done this before. This is now going to be the third year that we're, doing this. And it's when January rolls around, it's almost boring, right? Because the month to date and year to date are really the same exact data. So it's going to be a relatively short call with a little bit of ad lib. But I do have some things to just point out, at least in, as we look at the horizon, the landscape, some initial comments. But I just sharing my thoughts as we continue, and we'll go from there. So without further ado, how did January look? And you have hot pink, which is your S&P, right? So the blue chips actually did well for the month. And then we have total return, that's the SPY S&P as well. So between those two, I think that the market looks healthy. I'm sorry, the hot pink was commodities, right? But then you have the teal green, or the dark green evergreen is the SPY, right? So those two or three. The purple is the Dow. Now, with that said, the S&P reached all-time highs today, and so did the Dow, right? So with the Nasdaq having a healthy bump as well, all due to Nvidia. Nvidia is just touting and has really become a central focus point of AI into the future. And I hear that there's a lot of talk and conversations and thought processes around AI, both good and bad, right? So it's going to be I think something to keep our eye on. But one stock doesn't make the markets, and as we continue to see things progress, we'll keep an eye. But I think good news warrants it in the S&P, and we'll see that as I was looking at a chart today, you don't break a trend. But there's also simultaneously today, I don't know how many of you experienced that, but AT&T had a major outage today, right, across the country. Now, we don't think it was nefarious, but the gloom and doomers will say that there's that was only a small example should some type of cyber attack actually happen. I saw some pharmaceuticals got hit that they do think was a cyber threat. So, if somebody does decide to attack some of our infrastructure, it could get ugly, and you should have some components of protection in place, right? So just think to yourself, communication devices, backup, fresh water, all those things are just good should things unravel quickly. Again, this was just a software update, but I think it really does bring to attention things that we should have on our radar, and both from an investing standpoint and from a security standpoint. So that everybody, I think, does know that I'm very, very in tune with protecting our families, our friends, our communities, right? These are all things that are important, and we have to keep our head on a swivel. There's a lot going on right now, and what sort of brought that to my attention is because as many laws and security that we have in the United States, they don't have that in Mexico. When I was in Mexico, there was a couple incidences that we were in double gated communities, and we were safe and secure. But there was people with AR-15s walking up and down the beach, right? There was police presence everywhere. The cartels are present. The corruption is evidence. There is a lot things to understand that we are blessed to live in a country that promotes law and security and safety of our citizens. But when you go to a foreign country, you're on their turf and you have to be careful. Now, there was a couple incidences, and I can tell you that in having conversations with people that were there, that the incidences that occurred 100% of the time, the guy said it's drug related. So as long as you're not involved in those types of things, chances are low that you'll have any kinds of issues. So, when we're thinking about travel and we're thinking about retirement and we're thinking about going places with our family, we have to do our homework and we have to pick locations. And I went last year on an expedition to sort of scout out Mexico. And it was, again, everybody had a blast. But I digress. I just wanted to share with you that the markets are going to continue this year. I think we will have a lot of volatility again. It's an election year. You have a lot of noise out there. You have China, you have Ukraine. So I am still cautious. Even though you don't buck a trend, even though we're at all-time highs in S&Ps, I'm not saying sell and get out of the market, but we do need to have mechanisms in place to protect if we have a correction or a downward pressure. And like I said, just AT&T stock today with their outage lost a significant amount of value like that. And that was, like I said, based on all the experts, what they're saying is this was a very mild incident caused by software compared to if something larger had happened. So we have to start to think about, as we're investing, as we're protecting our future, as we're planning for retirement, that we have some mechanisms in place. So again, I went a little bit deep on that only because the two slides, these mirror. So this is month to date for January, and this is year to date for January, exact same data. So, as we continue to progress through the year, I will continue to bring, my thoughts and opinions and observations about what I see going on both here in the States and then also globally, right? Because these are the things that can affect our future as we progress. Right now, and again, this chart here does show an upward trend. We have a green line. Things are continuing to move north. And so all that is good news, but this is where we will stress again, diversification, diversification, diversification. So you need to have some strategies that are in place that will allow you to participate in both the upward side and simultaneously, if we do have pullbacks, if we do have corrective actions, that we don't take a bath. And that's why working with somebody that, most 401ks, we don't have that option. So just wanted to share that with you. All right, so now we get into fixed income. And again, these two slides, this is month to date. It's also going to be the same on year to date. And, if 1 month, your yield, if you were looking and you have a heavy exposure to fixed income, if you're drawing income off your portfolio, it wasn't great, depending on what you're actually in. So again, the dark green, this is high yield. High yield is another word for munis. And I think the reason this is was sort of positive territory is because people, when they're looking for yield, and now as interest rates started to drift back a little bit, right? People start to say, hey, I need that because I'm on a fixed income. And I just had real quickly, I'm going to show just real quickly, one of my clients just sent me this article from New Jersey, 2023 senior freeze property tax reimbursement applications are in the mail. So this was not something I was familiar with. So if you're here in New Jersey, basically New Jersey, I think is experienced something similar to what New York has been, which is this exodus, right? I was on New Jersey 101.5 just about a month ago, 3 weeks ago. And, one of the things that I talk about, it's the taxes, it's the taxes, it's the taxes. And one of the things that I've seen is that people are leaving here because it's so expensive, both property taxes, sales taxes, income taxes, inheritance taxes, all the things that go along with New Jersey. I think New Jersey has been seeing an exodus as well. And if enough people leave, that leaves the burden to pay the bills on a smaller pool of people. But New Jersey is not naive, and they will do things to sort of I think lean in a way that will allow people to stay, and people that are on a fixed income, they're saying, hey, you know what, we're going to suspend this for 10 years and we're going to up the amount of money to people that are earning up to $150,000. So just a little bit of sidebar. I wasn't aware of this. It was shared with me, so I just wanted to talk about that real quickly. So back to our slides, again, fixed income, how does the economy look? Obviously the treasury yield, this is where, people, it's a flight to safety when everybody is thinking that the sky is falling. So it's not going to perform as well when people can get yield elsewhere. And then lastly, that's year to date. So it's the same. So they mirrored each other. And we have a green line. So, with right now, I was pretty much talking for a decade that bonds were not really a great place to be. But if I were still employed and I had the ability to put some money into a 401k, right, I would look to start to add that to my portfolio. Not, never take what I'm sharing as my opinion as strict investment advice. These are only strategies to help you to sort of analyze the noise that's out there with the talking heads. Right. So if we know that a 60-40 portfolio makes sense for us based on our age, 40% of bonds, right? 40% of a fixed income type portfolio, right? I'm now less concerned about bonds right now because of we're starting to get more into realistic, or I think normal interest rate environments. So that green light says that if I was dollar cost averaging into every 2 weeks or every month into a 401k, having a component into some AGG, which is, US bond portfolio, I think makes sense and does allow us to continue to diversify. So that's my opinion and my 2 cents there. And then the last one is our RPA, which is our recession probability analytic tool. And this is, it's still high. It's above 50%. So once you're at 50%, it means that, hey, there's a recession, that, there's storm clouds on the horizon. Now, for January, which was reflecting back to December, the end of last year, it was 62. So it's come back about a point. But it's still above 50. So, it doesn't mean that we have clear sailing, that we don't have storm clouds ahead. We need to make sure that we are just being thoughtful in where we're putting our money. And as we're starting to, the two C's I would leave us with for this year: commit to a strategy and be consistent. And that's why 401ks work so well, right? It is because we're able to, without seeing it, just to be consistent. And I think that makes a lot of sense. So, the next couple of weeks, I think next week we're going to be talking about one of the platforms that we were introduced to that we're going to start to put onto our website. I'm not going to give away the secret yet, but if you have any questions, please reach out to us. I'm glad to see everybody. I know it was a short call. I actually didn't think I was going to make it 15 minutes. So a lot of my, sort of sidebar did allow me to get there. But I really, hopefully, like I said, I continue to just be looking out there, trying to share with you what I'm doing. And with that, I want to welcome everybody. Let's see, Chris, the scale on the RPA graph shows in 2025, huh? No, that was a typo. So I apologize, Harold. So I'll get back to Mark, who designs that for me. So good catch, and we'll go from there. So, well, this says here, 2025. So this is a typo. So what Harold just pointed out, this bottom line, this should be 2024. So he just got this y-axis incorrect, but the date is for 2024. All right. So without further ado, let's have a great day, and again, reach out if you need me.